The dream of the moon bag has been a cornerstone of this community for years. It's that specific number in your wallet, a digital tally that, if the stars align and the charts turn green, it finally buys you a way out. For many, that number has always hovered around 20,000 XRP. The math, it seems simple, almost poetic. If the price hits $100, well, you are looking at a cool $2 million. Now, in any kind of rational era of human history, $2 million was the finish line. It was the quit your job, move to the beach and never look at the price chart again kind of money. It was the ticket to a life where the word boss became a memory and the Monday morning alarm clock was a relic of the past, right? But as we kind of step further into 2026, a new and unsettling narrative is starting to take hold. We are no longer living in the economic landscape of 2017. We are where kind of $1 million could have secured you a generational legacy. No, the world has now changed. The value of the currency that we are measuring our success in is actually shifting beneath our feet like sand. A recent report has sent a few shockwaves through the timeline, challenging the very idea of what enough actually looks like in this economy. Expert says that you cannot achieve financial freedom by holding 20,000 XRP. It's a bold, almost offensive claim. To the average person working a 9-to-5, hearing that $2 million just simply isn't enough to secure your future feels like a slap in the face. It feels like the goalposts aren't just being moved, they are being strapped to a rocket and fired deep into space. Now, the expert in question argues that even if XRP hits that legendary triple-digit valuation, the resulting $2 million portfolio would fail to provide true, lasting financial independence. But here is where things get more complicated, because this isn't just about the math, it's about perspective. You see, in my view, this is an interesting topic because it is entirely subjective to each individual person. We often look at these expert opinions as if they are the universal laws of physics, but they are not. They are just reflections of a very specific lifestyle, a specific set of anxieties, and often a specific class of wealth that the average person never really touches. Now, my take on this is what is that kind of while the experts might be right for a certain class of person, everyone with high overheads, massive debts, and a desire for high-end luxury, well, this isn't a universal truth. I mean, consider the math of the everyday. Some people might actually have fewer needs or wants than others, effectively lowering their requirements for massive holdings. And if you live in a low-cost area, if your house is paid off, or if the idea of freedom is simply time rather than status, well, $2 million is still an astronomical sum. However, the expert's warning carries a different weight when you factor in the world that we are living in today. You see, between the shifting value of the US dollar and the rising costs of everything from energy and to groceries, well, the freedom that we are all chasing is becoming a bit of a moving target. We do have to ask ourselves, is this expert trying to protect us from a false sense of security, or are they fundamentally misunderstanding the reality of the average retail investor? See, to find out, we have to look closer at that specific number, the 20,000 XRP. Why that amount? And what does it actually represent in the hierarchy of the XRP ledger? To understand why 20,000 has such a grip on the collective imagination of the community, we have to look at the cold, hard data of the ledger. You see, in the world of crypto, we often fall into the trap of thinking everyone else is holding a mountain of tokens. We see the whales on social media, we see the institutional buy-ins, and we start to feel like our own bags are insignificant. Right? We compare our modest holdings to the multi-million XRP addresses and feel like we are late to the party. But when you actually strip away all of the noise and you look at the actual distribution of the wealth on the XRP ledger, a very different picture starts to emerge. As of early 2026, the total number of XRP wallets has climbed past the 7 million mark. On the surface, that sounds like a massive army of investors, but the vast majority of these addresses are, for the lack of a better word, dust. Over 6 million of those wallets hold 500 XRP or less. That is roughly 85% of the entire network holding what many would consider a starter position, a speculative bet rather than a life-changing investment. Only 10% of the 6.38 million total XRP wallets hold 2,500 XRP or more. This is the reality check. You see, if you hold just 2,500 XRP, you are already in the top 10% of all holders on the planet. By the time that you reach that at least 20,000 XRP mark, you are not just a retail investor anymore. You are arguably one of the ecosystem's elite. Right? Recent data has suggested that holders of the $10,000 to $25,000 or XRP range actually make up a tiny little fraction of the total user base, somewhere in the top 2%. So, why is this number so controversial then? Well, it's because for the average person, 20,000 XRP, it represents a significant sacrifice. At current market rates in 2026, accumulating that much is not just a hobby. It is a major financial commitment. In recent years, dollar cost averaging, skipping maybe vacations and putting every spare dollar you have into a digital asset while your peers are buying new cars and upgrading their homes, it is a deferred life plan. Now, to have an expert come out and then say that this mountain of effort might still result in failure for financial freedom is a psychological gut punch. You see, in my view, the expert stance overlooks the relativity of the wealth. You see, my take on this is that we've become so obsessed with this 0.1% that we've forgotten what it means to actually be ahead of the curve. You see, if you do hold 20,000 XRP, then you are standing on a hill that millions of others are still trying to climb. The expert might see $2 million as a small little safety net, but for the average person holding 500 tokens, 20,000 tokens looks like the keys to the kingdom. So we do also have to look at the psychology of the rounding numbers too. You see, humans, we love clean figures, 10,000, 20,000, 50,000. These become psychological milestones for people. But markets movements, they don't really care about our own personal milestones. The question isn't just how much XRP you have, but what that XRP has to do to get you to your goal. And that brings us to the most debated price target in the history of this coin, the triple-digit dream. If 20,000 tokens is the vehicle, then $100 is the destination. Now, it is the number that has launched 1,000 YouTube thumbnails and fueled countless late-night debates in Discord servers for nearly a decade. But we do have to be honest with ourselves. A $100 XRP isn't just a price increase. It is a fundamental rewiring of the global financial system. To reach that kind of level, we are not just talking about retail hype or a bullish bull market, right? No, we are talking about market caps that rival the largest companies and even some of the largest economies on Earth. Now, the math of a $100 price tag is quite staggering. With a circulating supply of roughly 55 to 60 billion tokens, XRP at $100 would mean a market capitalization of $6 trillion. Now, for context, as of early 2026, that is more than double the valuation of Apple or Microsoft at their peaks. It is a number that is so large that it feels kind of fake, a number that exceeds the GDP of most developed nations. And yet, the bulls will argue that this is the wrong way to actually look at it. They say that you should not compare a bridge currency to a tech stock. You should compare it to the volume of the ocean that it is meant to navigate. XRP could reach $1,000 in 10 years, but the path forward will be long and uncertain. Now, this quote illustrates the sheer scale of the ambition that is here. If voices in the space are looking at $1,000 as a long-term possibility, then $100 starts to look like a midway point rather than an end of the road. But long and uncertain is the part that most people kind of gloss over. Now, we want the freedom now, but the timeline for institutional adoption moves at the speed of a glacier, not at a day trader's whim. Now, the uncertainty includes regulatory hurdles, competing technologies, and the sheer inertia of the banking world. You see, in my view, this obsession with these massive price targets often blinds us to the intermediate wins. Now, we take on this is kind of what we've kind of been conditioned to think about, that if XRP doesn't hit $100, well, the investment was a complete waste of time. But if you actually hold 20,000 XRP and it hits $10, well, you do have $200,000. And for the vast majority of people on the planet, that is still a life-changing, debt-clearing amount of money. Right? It is the difference between being trapped in interest rate hell and finally breathing. However, the expert we are discussing today isn't interested in debt clearing. He is looking at financial freedom, the ability to never work again, to fund a lifestyle for the next 40 to 50 years. And in his world, even the $100 dream might not be the happily ever after that we've been promised. He looks at the $2 million figure and sees something very different than a beach house and a carefree life. He sees a trap. Now, to understand why, we have to look at the specific arguments that he uses to dismantle the $2 million dream. When we dig into the meat of the expert's argument, we find a perspective rooted in the cold reality of wealth management. A world where $1 million isn't a windfall, but is actually just a responsibility. Now, the core of the claim is that 20,000 XRP, even at a $100 valuation, creates paper wealth that is, deceptively fragile. Now, the expert isn't just looking at the number on the screen. He is looking at what happens the moment that you try to turn that screen into a lifestyle. You see, first, there is the tax man. Depending on where you live, that $2 million could be cut down by 30 or even 40% the moment that you hit that sell button. And if you haven't planned for capital gains, well, the state and federal governments are going to be your largest beneficiaries. Secondly, your 2 million is closer to 1.2, and then you have to look at the math of misery, the calculation of how long that money actually lasts when it's your only source of income, right? If you are, let's say, 35 years old and you plan to live on that pile of cash for the next 50 years, well, then you are looking at a very tight budget once you account for healthcare, property maintenance, and the inevitable black swan event of life. People who hold XRP for a long time may one day lose track of how much their investment is worth. This is a subtle but powerful warning about the psychology, at least the psychological trap, I should say, of the long-term holding. You see, when you've been diamond handling XRP, an asset like this, for years, but you develop a strange relationship with the price. You stop seeing it as money and you start seeing it more as a score. Now, the expert suggests that by the time XRP hits these legendary heights, the holder might be so detached from the practical utility of the actual cash that they fail to plan for an exit. They simply stay the holder key stay in that holder mindset, while the rest of the world around them just becomes more expensive. Now, in my view, this is where the expert's logic starts to actually lean heavily on a high consumption worldview. You see, my take on this is that he is assuming everyone wants this luxury lifestyle. He talks about lifestyle creep, the idea that as soon as you have some money, you'll naturally want to have a better car, you'll want to have a better house, and the premium subscriptions, right? He is assuming that you want to join the country club, not just pay off your car. But this isn't a law of nature, it is a choice. You see, if your goal is freedom, that usually means freedom from the need to impress others. However, we cannot ignore the structural issues that he does bring up here, because if you do have $2 million in the bank account earning minimal interest while the cost of living climbs by 5% every year, well, you are effectively getting poorer every day that you stay retired. Now, the expert's verdict is that 20,000 XRP is a wealth building tool. It is not a wealth sustaining one on its own. It is a harsh realization. You see, the moon bag might at least get you to the moon, but it might not actually provide enough oxygen for you to stay there forever. Now, this leads us to a much darker realization, one that the expert hints at but doesn't fully name. Now, we aren't just fighting the market here, we are actually fighting the inevitable erosion of the currency itself. The most terrifying part of this investigation, it isn't the volatility of the crypto market, it is the steady, silent destruction of the dollar's purchasing power. So when we talk about $2 million in 2026, we do have to acknowledge that it simply doesn't carry the same weight that it did in 2020 or even 2023. You see, we are standing in a deep dark hole where the numbers on our bank statements are getting larger, while the bags of groceries that they buy are getting smaller. See, we are running up a down escalator, and the escalator is picking up speed. Now, to understand why the expert claims that 20,000 XRP simply won't cut it, you have to look at the macro environment. If we hit that $100 price target in a world where a basic sedan costs $80,000 and a modest family home in a safe neighborhood starts at $1.5 million, well, that fortune starts to begin to look a lot bit more like the middle-class safety net. Now, the expert's argument, it relies on the idea that by the time that XRP reaches its full potential, the goalpost for financial freedom will have shifted even further away. $2 million is nothing. Pennies in today's world. You see, that quote, it starts to sound hyperbolic, right? And even maybe insulting to someone who is struggling to save their first $1,000. It points to a grim financial reality. For a high net worth advisor, $2 million is often seen as the danger zone. It is enough money to make you feel rich, which leads you to risky spending and an abandonment of your career. But not enough money to generate a self-sustaining income stream that outpaces inflation. It is the amount of money that makes people quit their jobs only to find themselves broke 10 years later because they didn't account for the compounding cost of existence. Now, in my view, this is the most cynical part of the expert's narrative. See, my take on this is that they are using macro fear to diminish the success of the retail investor, right? Yes, inflation is real. Yes, the dollar is being devalued, but telling someone that $2 million is pennies is a perspective born from extreme privilege. Right? Most people aren't looking at join the billionaires class, are they? Right? They are looking at stopping trading their health for a paycheck. They are looking for the ability to say no to a toxic boss. However, we do have to look at the numbers objectively, right? If you take that $2 million and put it into a traditional safe withdrawal plan of 4%, then you are looking at $80,000 a year before taxes. In 2026, after healthcare costs and rising costs of utilities, an $80,000 salary feels more like a survival than a freedom, at least in many major cities. See, the invisible hand of inflation is essentially a tax on your patience. The longer that it takes for XRP to hit $100, the less that $100 will actually buy you when you finally arrive there. See, this creates a paradox. If $2 million is not enough, then how much is? Does the requirement for freedom scale infinitely, right? or indefinitely. See, this is where the investigation trail leads us away from the spreadsheets and more into the human psyche. Right? We have to confront the freedom paradox. We have reached the point in the investigation where the math stops being the main character and the human ego starts to take over. This is the freedom paradox. It is a realization that freedom isn't a fixed point on a map, but instead it is a mirror that reflects your own desires, your own fears, and your own insecurities. You see, if you ask a billionaire how much is enough, they might tell you that it's another billion. And if you ask a man who hasn't eaten in 3 days, the answer is going to see a simple sandwich, right? By claiming that 20,000 XRP, a potential $2 million target, isn't enough for financial independence, well, the expert is projecting a very specific and even perhaps a very narrow vision of a reality onto everybody else. Now, in my view, this is an interesting topic because it is entirely subjective to each individual person. Right? We spend so much time looking at expert price predictions and wealth management strategies that we forget to define what we actually want from our own lives. We've been sold a vision of the American dream that requires millions upon millions of dollars in overhead. But the dream, or that dream, it is not mandatory. This is subjective to each person. Some people might have less needs and wants than others, lowering their requirement on larger holdings, whereas others might want or need more to fund their lifestyle. This is the core truth that the mainstream financial media will often ignore. Now, my take on this is that the expert is likely calculating freedom based on a legacy lifestyle, the kind that involves high-end zip codes, private schools, and luxury travel. For that person, yeah, sure, $2 million is a kind of precarious starting point. But for the person whose dream is to live in a modest home, to grow their own food and maybe spend their days reading or working on a passion project, doesn't actually need to turn a huge profit like $2 million into an absolute fortune. It's all about the liberation. Now, the paradox lies in the fact that for many, the more money that they acquire, the less free they actually do become. The more they buy more things, that requires more maintenance, which leads to more insurance, which creates more bills, which ultimately requires more wealth to sustain. They become a servant to their own assets. They spend their time managing their money rather than enjoying their life. So if your goal is to hold 20,000 XRP, then you have to ask yourself, are you trying to buy a life of peace? Or are you trying to buy a seat at a table that you don't even like? Now, some people are perfectly happy with a simple existence, right? Their needs and wants are calibrated to the frequency that the modern financial expert can't even hear. Right? They value experiences over possessions. And if you don't care about the newest car or the status that comes with a certain neighborhood, well, the threshold for your exit is significantly lower. The expert here saying that you can't achieve freedom with 20,000 XRP. Well, I say he can't achieve freedom with it, but that does not mean that you cannot. But while you are busy debating the philosophy of enough, something is happening behind the scenes of the XRP ledger. There is a reason that institutional players are moving in, and it has nothing to do with whether or not you can retire on a beach. While the retail world is locked in a heated debate over whether $2 million can buy you a comfortable retirement, the real players, the ones moving the tectonic plates of the global economy, are looking at the XRP ledger through a rather completely different lens. You see, this is the revelation, the reason that the expert might be dismissing your 20,000 XRP bag isn't necessarily because of your lifestyle choices, but because they are viewing XRP as a fundamental plumbing for the future of finance, rather than just a speculative asset. asset. They see it as a macro asset, not as a moon bag. Now, for years, the XRP army has focused on the when moon narrative, right? We've focused on the candles and the charts, but the institutional pivot here actually suggests that XRP's value won't be driven by people buying it on the exchange to get rich, right? It actually will be driven by its utility as a bridge between central bank currencies, CBDCs, and the legacy systems like SWIFT. It will be driven by the need for instant cross-border settlements in a world that can no longer wait 3 to 5 business days just to move some money. The XRP ledger could acquire a market share equal to 14% of SWIFT's volume. And if that happens, the price of XRP isn't being determined by the retail supply and demand. It is being determined by the liquidity needs of the global banks. Now, this changes the math entirely. If, at least in this scenario, the expert who says 20,000 XRP is not enough might actually be right, for a reason that you haven't actually considered, right? They are not looking at at your bank account. They are just simply looking at the volatility required for the system to actually work. Now, if XRP is meant to move trillions of dollars daily, well, it needs to be highly priced to handle the volume without creating massive slippage. A 5-cent XRP simply cannot settle a $1 billion transaction. A $100 XRP, though, that can. Now, in my view, we are witnessing a massive disconnect between what the average holder thinks that they are buying and what the institutions are actually building. Now, my take on this is that freedom that we seek is a byproduct, right? While the institutional utility is the actual engine. Now, we are essentially hitching a ride on a freight train that is being built for the world's central banks. And if the system pivots and XRP becomes the global settlement layer, though the price could indeed skyrocket to those triple-digit levels. But the world that we would live in would also be fundamentally different. We would be moving from a speculative Wild West to a regulated, high-utility environment. Now, that revelation, at least the revelation that is here, is that your 20,000 XRP might be worth $2 million, but in a world where every major transaction flows through the ledger, that $2 million might just be the entry fee for participating in this new economy. Now, it's the new middle class. The expert's warning here, it starts to actually make sense if you believe that the gap between the wealthy and the middle class is widening even further during this particular transition. Right? They are essentially saying that $2 million is the new zero. It's a sobering thought if you think about it. You might win the trade of a lifetime, but only to realize that you're still just a small fish in a much, much larger ocean. But let's go ahead and pull back the grand theories and look at the actual spreadsheets. Because if we assume the $100 target is reached, then how do you actually live off of that money without burning through it within a decade? Well, we might need to look at the math of enough. To move past all of the emotional debate of whether $2 million is a lot or a little, we actually have to look at the numbers of a professional wealth manager, at least how a professional wealth manager would look at the numbers, right? We have to strip away the hope and we have to look at the yield. Now, in the world of finance, there is a gold standard for retirement called the 4% rule. Right? The theory is quite simple. If you invest your nest egg in a diversified portfolio and you withdraw 4% every year, adjusted for inflation, then your money should theoretically last for at least 30 years. But then we apply this to a $2 million XRP windfall. The reality is a little bit more complicated than just hitting a button and walking away. See, first, we have to deal with the immediate haircut. Because if you do sell 20,000 XRP at $100, well, you have a gross profit of $2 million, let's say, but that hasn't or isn't the amount of money that's going to hit your bank account. Now, in many jurisdictions, once the federal and state capital gains taxes are applied, then you are going to be walking away with roughly $1.3 to $1.5 million. Now, that is the first leak in the bucket that many retail investors ignore in their moon math fantasies. They calculate their future based on the gross and not on the net. A 3.5% annual withdrawal rate on $2 million provides roughly $4,375 a month after taxes. Now, let's take a look at that monthly figure then, $4,375. In 2026, after the massive inflationary spikes that we've witnessed over the last few years, that amount of money buys very, very little or very different kind of lifestyle than maybe it did a decade ago. It is a respectable middle-class income, but it isn't wealth. It doesn't cover a mortgage on $1 million home, a lease on a luxury SUV, and high-end health insurance for a family of 4. This is exactly what the expert is pointing to when he says you cannot achieve financial freedom. Now, he is defining freedom as the ability to live a high-status life without a job. He is looking at the cost of luxury, not the cost of living. Now, in my view, this mathematical breakdown is a vital reality check, but it does miss the human variable. Now, my take on this is that most XRP holders aren't looking to dump their entire bag into a 4% withdrawal fund. They are looking to clear their debts and lower their monthly burn. And if that $1.5 million pays off a $500,000 mortgage and clears $50,000 in high-interest consumer debt, well, your cost of living drops off of a cliff. Suddenly, you don't need $10,000 a month to survive. You simply need $3,000. Suddenly, that remaining $1 million doesn't need to work anywhere near as hard as it did before. You see, the math of enough is entirely dependent on your own burn rate. If you keep your expenses low and avoid the temptation to look rich, 20,000 XRP is a life-altering fortune. But if you view that $2 million as a license to upgrade every aspect of your life, to buy the status symbols that you're watching from afar, well, you're going to find yourself back at the desk within 5 years, wondering where all of the money went. The expert is warning us about the trap of new money, right? The tendency to spend based on the balance in your account and rather than the cash flow that it actually generates. Now, this brings us to a darker possibility. What if the $100 price tag and target never actually comes? What if we are focused on the math of enough that we ignore the risks of the warning that is staring us in the face? As we stand at the edge of 2026, the optimism of the Moonbag narrative is facing its most brutal challenge yet. While the dream of 20,000 XRP turning into $2 million is a powerful motivator, a light at the end of a very long tunnel, we do have to confront the very real possibility that the market may not cooperate with our timelines. Now, this is the final reality check, the moment where we look at the structural risks that the expert and the broader market are signaling. We have to look at the warning signs that are often drowned out by all of the hype. See, the most pressing warning is coming from the shift in how the network actually functions. For years, we've banked on the idea that Ripple's success is XRP's success. We've treated them as two sides of the same coin. But a growing chorus of analysts is actually pointing out a structural red flag that could decouple the two. The company is flourishing, but the token is not keeping pace. Without a reliable organic source of demand, XRP is at the mercy of speculative investors, which isn't a recipe for sustainable long-term upside. You see, this hints at a deep anxiety within the community, the fear that institutions might use Ripple's technology, the ledger's speed and efficiency, without needing to hold massive amounts of the XRP token itself. If banks choose to settle transactions using fiat-backed stablecoins or even Ripple's own RLUSD instead of using XRP as a bridge, well, the utility-driven price explosion that we've all been waiting for might never materialize. Now, in this scenario, XRP remains a speculative asset, a high-stakes game of musical chairs where the music could stop long before we reach that $100 mark. Now, in my view, this is the truth that most influencers are just simply too afraid to discuss because it doesn't sell their subscriptions or get them the clicks. Now, my take on this is that we are currently in a transition period where the market is splitting into two games: the old game of pure hype and the new game of institutional infrastructure. And if you are holding 20,000 XRP based on a 2017 era hodl strategy, then you might be ignoring the fact that the rules have now changed. The experts warning that $2 million isn't enough might be a distraction from the bigger risk. The waiting for $2 million could lead to you holding all the way back to zero. Now, we do have to consider the opportunity cost. While we wait for the flip the switch kind of moment, the global economy is moving. AI is transforming industries, other assets are reaching all-time highs, and the cost of entry into other wealth-building tools is rising too. If XRP remains stagnant or continues its pattern of lower highs, while other sectors of the economy are starting to thrive, well, your 20,000 tokens aren't just a stagnant investment, they are now a weight. They are an anchor holding you back from other opportunities. The expert's verdict on financial freedom assumes that you eventually get the money. But the reality, or the final reality check, is that freedom is not a guarantee by passage of time alone, right? It requires a level of vigilance and willingness to pivot that a kind of set it and forget it mindset simply will not allow for. So, if the math is uncertain, then the inflation is rising and the institutional path is narrow, where does that leave the individual holder? It leaves us at the final chapter of this investigation, looking beyond the bag and redefining what the goal was in the first place. We began this journey by looking at a number, 20,000 XRP, and a claim that it wasn't enough to buy your way out of the system. We've looked at the math of the ledger, the institutional pivot, the invisible erosion of inflation, and explored the math of retirement and the warnings of the skeptic. But as we reach the end of this investigation, the most important revelation isn't found in a price chart or a wealth management spreadsheet. It's found in the mirror. See, the truth is that financial freedom is a hollow concept if you don't have a plan for what to do when the freedom, at least with that freedom, once you actually have it. You see, the expert who started all of this firestorm is looking at wealth as a destination, a final summit where the climbing stops and the resting begins. But in the volatile, high-speed landscape of 2026, wealth is actually a tool. It is not a trophy. It is a fuel for a journey, not the end of the road. And if you are waiting for a specific price to start your life, to start maybe being happy, to start being healthy, to start being the person that you want to be, then you are already losing the most valuable asset that you have: time. Right? Whether you hold 1,000 tokens or 100,000 tokens, the number on the screen is meaningless if you haven't mastered the psychology of enough. Not holding 1,000 XRP is insanity, but how you manage it determines your future. You see, this quote, it cuts through the noise of the expert versus retail debate. It acknowledges the massive potential of the asset while placing the responsibility squarely on the shoulders of the individual. It suggests that while the asset might provide the opportunity, it is the person holding it who determines the outcome. And in my view, this is the most honest take on the entire situation. My take on this is that the expert is not wrong about the $2 million figure being insignificant for a certain type of lifestyle. But he is completely missing the point of why most people are even here. They aren't trying to buy a private island. Some of us are simply trying to buy back our Tuesday afternoons. And if you have 20,000 XRP and it hits $100, well, you have options, you have leverage, you have a shield against the economic storms that are battering the global middle class. This is a form of freedom that cannot be measured in monthly withdrawal rates or 4% rules. It is the freedom of fear, the freedom of the constant low-level anxiety of not knowing if you can handle a medical bill or a car repair. Some people might actually have less needs and wants than others, and for them, the shield is more than sufficient. Others will always be hungry for more, and for them, no amount of XRP will ever be enough because their enough is always 10% more than they actually have. The warning that we've explored today isn't a reason to give up. It is a reason to get smarter. It is a call to move beyond the moonbag fantasy and start building a real strategy, one that factors in taxes, inflation, and the changing role of the XRP ledger. It is a call to look for the truth of your own life rather than the truth of an expert spreadsheet. True freedom is not found at the end of a bull run. It is found in the moment that you decide that your worth isn't tied to the volatility of a digital asset. The question isn't whether 20,000 XRP is enough. The question is, who will you be when you finally have it? And what will you do with that time that it actually buys you? But now you can do me a favor by hitting the like button, subscribing to the channel, and checking the video that is queued up on the screen.